A very good day to Madam Afuza. We are from Group 5 and we are going to present Genting Malaysia Berhad and Malayan Banking Berhad for our choice of multinational company in foreign direct investment and exposure project.
Good day, madam. I am Movita and I will be presenting on the introduction of the both companies that our group have chose. So starting with Genting Malaysia Berhad. Genting Malaysia Berhad is a private company limited by shares under the Companies Act of 1965 and is established in the year of 1980. Genting Malaysia is recognized for their gaming, hotel, and resort-related operations, along with goodwill and other pertinent assets. For example, they do have Genting Berhad plantations as well. Genting Malaysia have been traded on Bursa Malaysia's main market since the year of 1989 in December. So, Genting Malaysia runs under the industry of leisure and hospitality, properties, and also investment that makes up the three business segments. The company's leisure and hospitality business consists of integrated resort activities such as gaming, lodging, food and drinks, theme parks, which is their main attraction, which is their theme park. And also they do have property management, investment and development as well. So Genting Malaysia have a retained earnings of 30.66 billion and their revenue increased to 13.53 billion from the previous years. And it's also known that Genting Berhad ownership, Genting Malaysia ownership is of 49.5% based on their annual report. Next would be Maybank Berhad. As we all know, Malayan Bank Berhad, also known as Malayan Bank Berhad, operates primarily in Malaysia, Singapore, and Indonesia. Maybank is the fourth most valuable brand in the ASEAN region and the 70th most valuable bank brand globally. They offer financial products and services. So a large number of people own Maybank shares, with institutional investors controlling the ownership structure and foreign investors holding more than 20% of Maybank shares. Total assets surpassing 203 billion and a net profit of 1.93 billion. Maybank is one of the is the major bank in Southeast Asia and the largest bank in Malaysia by their market capitalization and also total assets. Maybank is the fourth largest bank by assets in Southeast Asia based on their net profit for the third quarter in this year by itself, 2022, which ended in September 30th. It has increased by 28.5% to 2.17 billion from the same period in the previous year as the group benefited from. And this is based off the news article leading to the reasoning behind this company being chosen. That is all for the introduction part. Moving on.
Hi, I'm Don Shakir and I will start with the SWOT analysis of the two companies. So first we'll be going with Genting Malaysia Berhad. So first we'll go through the strength of the company, whereby the company has a strong presence in the leisure and hospitality sector as compared to other companies. The company also has diversified business operations besides their hotels. They also have casino businesses in other countries as well, where we can see they have the largest casino owner in UK with 46 casinos currently in UK. So the company's weaknesses, firstly, they have weak performances of their diversified business. So in their business operations, their diversified operations such as the hotels and casinos all don't equally do well. So sometimes the loss in another business operation may affect the profits in another. So besides that, Genting Malaysia also has over-dependence in countries such as Malaysia and Singapore, where because of that, most of their resources are put into Malaysia and Singapore. Hence, places like operations in UK or US will suffer from it. And next, they have a decreasing in their current and liquidity ratios, which will have an effect on their financial performance. So next is the opportunity of the company where there is a development of Malaysian tourism in our country, which will help in the market share of the company. And next, the company also has a opportunity to expand their operations into more foreign markets. And also with the reduced COVID-19 restrictions, operations will go back to normal for the company and increase their profits. So the threats of the competition is that there is a high competition in the leisure and hospitality industry. And also government policy overseas may affect the financial operations or the business operations of the company. And next is the financial risk of the company, where their ratios of the company may not be good and affect the company's performance. So next is the Malayan banking Berhad or Maybank. So we will start with the strength of the company, where it's a large company where there's 46 branches in the whole of Malaysia. And also the company has started foreign expansion into other countries. And also their financial performance is superior to their other competitors in the banking industry. So moving on, we'll go with the weakness of the company, where even though they have an expansion into the foreign countries, it's still limited. So they can still build upon their global penetration. And also they have a limited source of revenue, where it's focused mostly on banking. So the opportunity of the company is that they have the opportunity to expand to other foreign markets for banking, and also with the increased demand in e-commerce, such as making the Maybank app or the May app. So the threat of the company is that there is legislative restrictions when expanding overseas, and also that there is still macroeconomic challenges when there's a problem of the COVID-19 internationally. So that's all for the SWOT analysis. Thank you.
Good day, madam. So now we are going to analyze the share price movement for Genting Malaysia Berhad from the period of early 1st February until the end of July 2022. So the share price movement, I'm going to analyze them from the quarterly financial year of Malaysia, which is the first quarter, the second quarter, and only the first month of third quarter. So from the first quarter, we could see from the movement from February to the end of March, the upward in the February was actually happened due to the temporary closure of RWG, which stands for Resort World Genting, followed by the reimposition of travel restrictions. So what happened here was during the early of February, after the reopening of Resort World Genting, there's a huge increase in terms of price share movements that promote the movement of the price of the share. But then towards the end of the March, the reimposition of travel restrictions again decreased the value of share price for Genting Malaysia, as it again devalue the share of the company. Moving on to the second quarter of the financial year, which is from April to June. From April to June, we could see an increase towards the mid of March that maintains until the end of June, but then the movement went downwards in the middle of June. So what happened here was actually this happens because the leaves of COVID-19 restrictions. So what happened during the mid of March, after the reimposition of travel restrictions, the government of Malaysia finally decided to ease and slowly put the economic movement for the citizens and also the locals to finally spend their money. What happened was Genting Malaysia managed to increase the share price of their movement, the share price of the value during April. And this movement, this trend continues, and there's a huge spike during May as they announced their new opening of Sky World Genting, a new theme park that was open during that time too, which also accumulated to the biggest peak in the period of the share price movement. But then towards the mid of June, what happened was this was entering the third quarter of the financial year, which is the reopening of national borders and also Genting Skywars. Although the opening of the Genting Skywars and the national borders increases the share price movement during the second quarter, the third quarter did not enjoy as much increase. This is because due to the competition that happened during in Singapore and also the geopolitical instability that are currently happening in Malaysia, as some Malaysians are still second guessing in spending their leisure time and hospitality as the rumors of political movements about to happen. So that's for Genting Malaysia. Now we're going to go for Maybank. So from the looking roughly at Maybank graph, we could say that Maybank managed to maintain their share price value throughout the period of February until July. In the first quarter from February to March, the geopolitical tensions and market volatility did spike the share price of Maybank. This is because of the insecurity of citizens of Malaysia and because of the COVID pandemic that was about to break during that time. Because of the COVID pandemic that just reaches its download at that time, people started to save more money. Saving more money and also increasing loans increase the share price for Maybank. And then moving on to April to June, we could see a consistent maintained of share price movement for Maybank as the reopening of economies helped boost fee-based income, which means the Malaysian border has opened. This increases the spendings of international borders from Singapore and also from Thailand to invest in Malaysia too. And then towards the end of the July, there's a slight dip until the end of July. This is because the improving economic environment across the region. On the contrary, believes since Malaysia is doing too much of improving economic environment, it make the international investors feel a bit insecure to invest in Maybank due to the instability of economic that are currently happening towards the end of July. Now we are going to compare and also analyze the three shares at the same time, which is the KLCI, which the market index for Malaysia, the Genting, and also the Maybank. So as you can see here, the lowest line here, the lightest blue indicates the KLCI. The purple line is the Maybank, and the turquoise line is the Genting Malaysia. So during February, this is the overall movement of Bursa Malaysia for all of the listed companies that are listed in Bursa Malaysia. So during the February and March, during the relaxation of COVID-19 outbreak during that time, securities daily trading volume continued to normalize to pre-pandemic levels. What this mean was, investors are still second guessing on the government method to control the pandemic and to also control the economic movement in order to curb the disease from spreading. So what they do, they only buy small quantities of securities in a careful amount as to not as to lower this. And then on April and June, domestic and global developments, including global inflationary pressures. As you can see, there's actually the movement of Bursa Malaysia, which is KLCI, is actually going downwards. So what happened was the war between Ukraine and also Russia is hugely impacting the Malaysia, as we have to also shift the geopolitical supply that comes from certain countries that cut ties with war countries. Does this movement have anything to do with COVID-19 restrictions? Yes, as Russia was slowly moving on buying more Chinese currency other than the US currency. Then going to the end of July, we can see a very huge dip, towards the middle, towards in the middle month of July, and then a slight positive increase on the end of July. So this happens during the recovery in global equities and the newly released positive economic data. So once Malaysia finally finds its balance and the economy has slowly opened its doors to global investors and continue our export and import duties, and also increase the interest to recover from the losses that we had to undergone and the deficit that we have to go through during the pandemic. Our Bursa Malaysia has finally managed to find the right movement to recover from the loss of global equities. Okay. So now going on to our currency, to our trade foreign currencies, MYR against USD, the ringgit against dollar in KLCI share price. So there's only two major points that could be made here. As you can see, the blue line is the currency and the black line is the KLCI performance. On the contrary, as the KLCI performance has seen a huge spike and downward and upwards, our currency is keep on depreciating against dollar on a very slow amount. This is actually a very positive performance for Malaysia, as we are slowly curbing our deficit against dollar in a very slow amount, as there's actually a slight increase towards the end of July. So what happened during the February and from February until June, high commodity prices and Malaysia's recovery prospect cushioned the downward pressure. The depreciation against dollar has nothing to do with Malaysian economy, as what happened was the war with Ukraine and Russia highly impacted the US dollar currency. Thus, they have to increase their interest. But miraculously, our ringgit managed to survive and only depreciated by a very small amount of by a very small curve. And then towards the end of July, even though our even though our ringgit is still depreciating against dollar, but our domestic growth mitigated further downward external pressure, which means we are relying more on our domestic product that are being exported to the country other than other countries' product being imported to our country. So that is all for the analysis of share price movement and also the currency against KLCI share price. Thank you. My name is Maizura.
Hello, madam. Hello, madam. I'm Darshni. So I'll be presenting the conclusion and recommendation. So from the analysis, GenM and Maybank were affected by the FDI and foreign exposure during COVID-19 period. This is evident by the share price performance of both companies during the period along the KLCI index. So the second one is from the data collected, GenM faces the greatest currency risk compared to the Maybank. The Malaysian ringgit / USD currency have higher exposure to Maybank. This is because Maybank is a financial service company, which means they are not directly impacted with the consumer during the pandemic. Based on two companies, the companies that were affected by FDI and another exposure is GenM. This is evident from the analysis done when comparing share price against the companies during the period. So from the analysis, some recommendations can be made. First, by improving the company's business model, such as involving like healthcare and productions. Secondly, be prepared. A company should always be ready to face the consequences and do research before indulging in an international market. So the last one is build a strong international network. The pandemic has proven that maintaining a strong international corporate relation is important to sustain each and other's business. Thank you. That's all from me.